Welcome to Bears in Exile. Today is Tuesday, February the 28th, and this is the market overview. Excuse me. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, NASDAQ, XLF, XOY, GE, and Apple. Okie dokie. Well, not exactly what we were expecting today. Surprise, surprise. Instead, the market decided to levitate on up, ending with a spinning top. No downtick on the Dow. And we still have the 14-day RSI moving average ticking on down. At some point, it's going to matter. It just isn't mattering yet. Stochastics are mixed. CCI ticking up. RSI ticking slightly down. Side tick on the MACD histogram. Side tick on the MACD. Just not encouraging really one way or the other. I mean, price is going up. It didn't exceed the previous high, but the 14-day RSI moving average is ticking down. So what can you say? Still have all the negative divergences in effect, but until they matter, they just aren't going to matter. SPX, stronger than the Dow, actually did make a new high. And CCI up, RSI up, MACD sideways, MACD histogram up, 14-day RSI moving average ticking sideways. Ooh, there's a warning sign. And the stochastics ticking up. Oof. The VIX also disappointing and confirming the move in SPX. Big red day. We got so close to having the potential for exceeding the lower price consensus level, and we're moving away from it. The only positive thing here is the short-term moving averages aren't clearly all pointing down. A few of them are, but still, it could look worse. 14-day RSI moving average still ticking up. Stochastics mix down on the CCI, side on the RSI, actually up on the MACD histogram, and MACD itself ticking up. Very strange. The NASDAQ, also strong. Thank you, Apple. Getting to the upper Bollinger Band, but not getting above it. 14-day RSI moving average ticking down slightly. Stochastics still pointing up. We're still waiting for them to loop over, which they have not done yet. Up on the CCI, back to very, very high, setting up a better negative divergence if it were to turn around. RSI getting back up to oversold, or I'm sorry, overbought again. MACD histogram ticking up, MACD ticking sideways. How about oil? Yeah, oil was positive today too. Surprise, surprise. Ending with a little doji star. I mean, the body is so darn small, but we don't have any downtick. We just have excessive separation. CCI ticking down slightly. 14-day RSI moving average, you've been watching this. It's still pointing up. Mixed on the stochastics, although the fast is pointing down. Down on the RSI. Down on the MACD histogram. And up on the MACD itself. A very mixed picture. Very mixed bag. How about TNA? Now this one is weaker at the moment, and normally it leads, so that is interesting unto itself. And had we not resolved the downtick, actually we got a downtick today, a new one. It was resolved intraday, which is just happening over and over and over as the ranges are significant. Down on the 14-day RSI moving average, mixed on stochastics, up on the CCI, side on the RSI, down on the MACD histogram, down on the MACD. So, very interesting. And if we can break the previous low, which is at 59.16, we should have a test of the 200-day moving average. At the very least, we'll be going into the bar for a retest. But still, no clear signs as of yet. It's very mixed. And it would be great if we could get confluence in the indicators and then have price follow suit. But instead, they are still mixed. It's still a waiting game. How about Apple? Since we already looked at the NASDAQ. Yep, there we go. Apple carrying the market all this time, and once again carries it again today. Interesting that it closed above the upper Bollinger Band slightly. It should have a side move or a slight down move. Seeing that it's Apple, I would assume it'll be a side move, but just incredible. 535 and almost a half. Whew. CCI very high, setting up negative divergence some more if we get it to turn around, perhaps even being really clean divergence and having 3 descending tops while the price is increasing. 14-day RSI moving average still ticking up. How about that? Stochastic still pointing up. CCI, of course, pointing up. Side on the RSI, up on the MACD histogram, and up on the MACD. Whew! Very strong, and who knows when it's going to actually have any kind of correction. It's just incredible. Incredible. More than $100 move in just over 1 month. Amazing. XLF. Oops. XLF. The banks. Ending with a small hammer. 14-day RSI moving average ticking down. Stochastic still pointing up. CCI pointing up. RSI slight tick up. Slight downtick on the MACD and uptick on the MACD histogram. Oof. How about that? UUP. Making a, well, actually just testing the previous floor. Getting to the 200-day moving average, up by a hair, but I mean effectively just there. 14-day RSI moving average ticking up. Stochastics already down to meet it. Down on the CCI, up on the RSI, down on the histogram, down on the MACD. We noted the bearish cross yesterday, or was it the day before yesterday? Anyways, we noted that, and we'd been saying that if the previous low would have been busted, we'd be definitely going for a test of the 200-day, and we are there. Question being, are we going to break it? I hope not. But of course, anything is possible. And if we were to break it, then the previous low really to look at would be right here just below 21.6. And then more importantly down here at 21, what is that, 21.15. Oof, that would be a huge run in the market if it was able to do that. If the 14-day was to turn around and stay locked in the down position. FXE. Ending with a hammer. We have excessive separation. There is a bubble here. 14-day RSI moving average ticking down. Stochastics mixed. CCI ticking sideways. RSI ticking down. MACD ticking up. MACD histogram ticking up. Very mixed bag. You would imagine that we would have some sort of corrective move. We know that there is a bubble here, but we do not have a downtick. No downtick. Very important. GLD, the second VIX. Not a bad looking candle, almost a spinning top, but not quite. The bottom is not low enough. We do have a little bit of excessive separation here. 14-day RSI moving average is ticking down. Stochastics are waiting to roll over. Up on the CCI, down on the RSI, up on the MACD, up on the MACD histogram. The dollar is going down. Gold should be going up. Fear was, going down, but it should be going up. And so it goes up. Interesting that the push-pull today, the dollar won. I think that normally fear should trump the dollar, but it is what it is. SLV. Whoo, look at that. Way above the upper Bollinger Band, which I personally believe has to do with fear. This is the third VIX. Down on the 14-day RSI moving average, stochastic stuck up high. CCI massively, massively high. RSI overbought, pointing up. MACD histogram up, MACD up. And a quick look at GE. Try to get a better read of the Dow. You can see that the short-term moving averages are moving almost into a flat line. We ended with a hammer today. Could be bullish, being that it is lower than the rest of this, but it's not at the at the floor low. 14-day RSI moving average leveling out. Ooh. Also not a good sign for bears. Down on the stochastics, slightly down on the CCI, down on the RSI, down on the MACD, down on the MACD histogram. So, in a perfect world, we should see greater movement to the downside in price. But until we really start to, and we go for a test of this previous low, the floor, which would be breaking both the upper price consensus level and the major price consensus level, we just don't know. And I think that's going to be about it for tonight. I don't think there's anything else really to look at. I do think that it was important that the Dow finally closed above 13K. I think that was psychologically important. And whether or not all of this energy was expended to accomplish that is unknown. But certainly today is the first day that that occurred. Now we get to see if that was just a target that needed to be met before we could have any corrective move. And that's it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.